The markets blinked, but was it a fake out or a real shift? Welcome to Market Wave Daily by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Tonight's map. Volatility is cooling, but is it a setup or just a sign? The dollar enters the target zone. Can it build a bottom from here? Yields are gearing up for the next move, while TLT flashes strong bearish signals. Gold and silver both dropped powerful signals. Could it change the metal game? Oil fails. Again. We'll map what's next after today's stumble. Uranium shows diagonal implications. Let's unpack that setup. SP 500 gets a multi-angle breakdown. Waves, candles, sectors, and major players. Nasdaq holds short-term prospects, but can it sustain the structure? We'll do it live. Feature of the day, Meta. We are pulling the charts apart. Candles, Elliott Waves, technicals, and what's the next move could mean for tech and broader index. A huge shout out to our 18,000 subscribers. You are fueling this growth, and we are just getting started. If you value structure, timing, and statistical edge, this is the channel to follow. Like, share, and drop your ticker in the comments. Now let's get to the charts. And as usual, we start with the Volatility Index. This is the daily closure, and this is what we see. The daily candles are definitely bearish, and they are moving down. We have a strong bearish candle here and a strong bearish candle in the futures. However, as I outlined before, this is not enough to reverse the trend on the daily frame. Let's see what would be the next moves. And if we just zoom out a little bit, this is the 2-day frame. It's far from being confirmed. So we are looking for another stronger move in order to close below the green candle, all green candles, in order to form this bottom or top. If we look at the weekly frame, there is also a concerning pattern being developed. So far, this could be a ladder bottom. 3 candles, each one smaller than the previous one, similarly to this. And I'd like to emphasize that the weekly still holds strongly above the 8 weeks EMA, which is a great support line for this one. And if we look at the potential Elliott Wave structure here, so this is the chart that we shared a while ago in the middle of April. Out of the first, I think that the first one was even earlier in April 10th. Yes. So this is potential flag being formed here. And now we are seeing either a rectangle or another bearish flag, which will move the price lower. And after this move complete, we will see a flag target, a move towards the flag target. So far it's sitting here. However, it might be adjusted depending on the next move. So this is the perspective for volatility. And now let's have a look at the dollar index. It's no less interesting. So dollar index is sitting in a very on a fence right now, technically. So the current price is 98.986. So if it climbs by above 99.014, it will form another potential bullish candle on the 2-day frame today. So far, the daily looks bullish, and this is going to be, I'm pretty sure already, it is going to be either piercing line, or if it pushes a little higher above the open of yesterday, it would be a strong bullish engulfing. This is the perspective, something to watch for another 2 hours, 17 minutes until it closes. And the weekly frame, last week on Friday, it closed with an inside candle. Potentially it can form a bottom if the next candle supports it. If we look at our short-term chart or mid-term chart, we are seeing that dollar right now is in the ideal area between 98.3 and 96. And once this is the area that I expected it to form a bottom. And we discussed it way at the end of March. This is the perspective. Now, if we see a strong bullish candle and the daily is already forming one, this could be a strong reversal point, potentially completing the multi-year wave 4. And if we look at the bigger chart, this is where wave 4 could be sitting. We have a potential strong bullish flag. And once this flag is complete, we might see a rally towards 113, 120 in the next couple of years. That's the perspective that we've been tracking since 2020. Now let's move on to the bond market and let's have a look what yields and what TOT are telling us. Let's start with yields. So first of all, I'd like to say that the 2 and 5 year, they formed very strong bullish reversal bottoms. The 10, 20, and 30, yesterday they technically completed the bottom, and today they are taking a pause. And today also a yesterday was 15-day closure, and a very strong tower bottom was formed for the 20-year. And if we look at the 10-year, also we had a very strong bullish engulfing here. There is a very good chance that in the next 15 days or longer, yields continue to increase rates, obviously. Now let's have a look at the different pattern, different chart. This is a 10-year yield. Daily we already discussed. It's most likely opposing doji. It's going to be here. On the 2-day frame, we have 3 white soldiers, and bears were not able to reverse these odds, and now we are seeing that the trend is flipping bullish here. The 15-day we already discussed, it's a strong bullish engulfing, and now it's time to discuss the potential monthly closure. As we discussed at the beginning of April, we were expecting yields to drop in towards this area to form a bullish flag, and now we can say that the task is complete. Now that there is a very good chance that on the monthly frame, 10-year yield will form a bullish engulfing. And this would be a very crucial candle down the road. All right, so now let's move on to another section. This is TOT. What we are seeing from TOT, from candles perspective, first of all, today we have a very strong bearish closure. Technically, it's a completed tower top on the 15-day frame with very strong technical support. The daily candles are bearish, and those who listened to our call on April 4th when we said that the TOT is set to fall sharply, they might feel much better now. So the weekly frame formed a bullish harami. However, it still requires a confirmation. It's absolutely not clear. At this point, the weekly trend is bearish, and we are looking for lower lows for TOT. If we look at the Elliott Waves for TOT, so no surprises here. As we discussed at the beginning of April, TOT formed an impulsive wave down and potentially completed an ABC corrective wave here. Now it is moving with another wave down, with impulsive wave down. However, as it didn't make a higher high here, there is a possibility that this wave started a little earlier. When I marked it here, a alternative 2, it could be wave 1, 2, wave 3 is ongoing, and then 4 and 5. That's the perspective for TOT from Elliott Waves. And another concerning point here, this is the spread 10 minus 2 year, and we are tracking this 10-day closure, 10-day candles after this huge bearish gravestone doji appeared here. Now we see four consecutive attempts to reverse the doji, and all of them failed, especially the important one today, because it climbed above the high of the doji and now it is being rejected. So there is a very good chance that the spread will go down, and this would be the perspective for Elliott Wave structure. Let's see how it develops, what it makes in the next couple of days. It will be extremely interesting. So now let's move on to the commodities section, and today we start with gold. While we are talking, gold is developing this interesting candle. So if we look at the 12-hour chart, this is obviously a very strong bearish engulfing being developed, and I highly doubt it's going to be reversed in the next 1 hour and 10 minutes. However, the daily is still has a chance. So if it closes below the 3378.588, which is a midpoint of the green candle, it will be bearish. It will be bearish dark cloud cover, and obviously we will have a spinning top or potential hammer here. However, if it closes above, it will still have bullish odds slightly higher. Well, that's the perspective, and the 2-day frame is also forming a hammer right now, but it would require strong confirmation. So let's see how it closes in the next 1 hour and 10 minutes. But we'll move on meanwhile and have a look at the Elliott Waves. So far, what we are seeing is that this is the chart that we shared with our subscribers and followers on April 18th, saying that gold has a very strong chance to move towards this area where it can find its top. Well, it surpassed it a little bit, pushed it over the red rectangle, and that was quite normal because waves 5 typically are longer than wave 3, and they are very difficult to project the exact length of them for commodities. But what we are seeing here is the potential change of the character, and right now there is a very good probability that gold would develop an impulsive wave down, and this would be a significant impulse. So it has 1, 2, 3, 4, potentially 5, and this would be wave 1 or wave A of a larger corrective action. And we change it to the different color, so this would be either wave A or wave 1. And earlier today we shared this possibility, like when all gold was forming 3 black crowds on the 4-hour frame. Earlier today we discussed it on our Discord channel and also shared on Twitter. Well, that's the perspective for gold. Let's see how it develops the first wave of the top, and then we will be able to discuss it further. And before we move to silver, I'd like to show you this. So this is GLD ETF, and today it formed a very strong bearish engulfing. So we have technically a spinning top or evening doji. Now we have a very strong bearish engulfing, entirely engulfing the previous one. And just to make things worse, GLD formed 5 gaps in one wave. So that's a super stretch. I would expect a move downward tomorrow or in the next couple of days. Well, that's gold. Now let's talk about silver, what silver candles and Elliott Waves are telling us. So if we look at the daily closure today, it looks like silver is on track for bearish engulfing. Let's see if it closes like this in 1 hour. On the weekly frame, the weekly wasn't able to impress, and technically formed potential setup for moving lower after this huge bearish candle. And today's closure, something we discussed with our subscribers in our weekly report. So this was a 15-day closure that we expected for SLV to happen today. And the closure below 29.58 means a strong inside down bearish candle. Now we have a very good chance to see SLV to continue down in the next 15 days or longer. If we look at the chart practically remains the same threats, the same concerns. Now we can see that silver is potentially breaking through the channel, and it has a chance to move lower and break this level. If it breaks this level, technically this would be a failed it would be a failed impulse, invalidated impulse in green, and I would be considering this as a potential move down for the either wave C or A, B, C in red, or another wave, much stronger, wave 3 in purple. So far, let's see how silver deals with the recent candles and with the Elliott Waves. And if we look at SLV, which I already discussed, so the daily candle today closed as a strong bearish Harami candle. Now, if it is confirmed tomorrow, then we will see pardon, not tomorrow. This is a 3-day candle. It needs another 3 days to confirm this one. If we look at the daily closure was clear confirmation of a move down. We had yesterday potentially a topping pattern, hanging man or inverted hammer, and now we are seeing a confirmation of a reversal. So on the weekly frame, there is a very big concern about potentially forming a bearish engulfing, and the 15-day frame we already discussed. So now let's move on to the next commodity, and this is oil. What we are seeing here is the daily failed again. In our weekly report, we discussed that oil needs to close above this red line, which is April 7th high, in order to form a true big bottom on the daily frame. Unfortunately, it looks like in 4 minutes it's going to fail again, and the chances for a move lower will be higher. The same thing happens on the 2-day frame. There were two consecutive attempts to close and form a bottom. However, both of them were rejected. Now I would be looking for a move down, and the 8-day frame today is closing with a thrusting line, which is a bearish continuation candle. The question is whether we are going to see a horizontal move for a couple of periods here before the next big leg starts down, or an immediate move down. That's still a question, but this is probably the biggest question. And the monthly frame so far is looking bearish. Oil needs to recover about 13 or more % in order to make it a bullish candle on the monthly frame. Speaking about the Elliott Waves, no surprises here. So far, oil is moving in a corrective fashion. Once we identify this potential path for on April 8th, so we had a sharp wave A, potentially wave B, and now there is a chance of a diagonal. By the way, this oil already formed the 5 waves here. So this is wave 1, 2, 3, 4, and this one is higher, has a higher high. So the diagonal could be complete if we see a very strong move down tomorrow. So in this case, it would be a truncated one because it failed to form certain ratios for an ABC formation. All right, so now let's move on to the uranium and see what is energy fuels candles are telling us. So first of all, the daily is technically confirmed a reversal, and but at this point I'm not seeing a very strong one. The 3-day frame formed a dark cloud cover, and it also needs a strong confirmation in order to push it lower. The weekly frame is more concerning. If it closes like this or pushes a little lower, then we would see a continuation, bearish continuation. If we look at the Elliott Wave, this is the chart that we discussed in our weekly report, saying that energy fuels potentially completed a diagonal for the last wave of an impulse of the top, and we were expecting a move down. So far it's been fairly sharp move down, and I am looking for wave ABC here. Maybe we can put a target somewhere. This would be the most typical target for wave C. If it breaks lower, then we would be this would be concerning, potentially forming a reversal. And so far, this wave looks impulsive, so it needs to make a corrective structure in order to be able to launch higher. So let's see, the next couple of days, particularly this week, will be important from candles perspective, like the weekly closure, and from Elliott Waves perspective as well. Okay, so now let's move on to the stock market, and we will be talking about S&P 500. All right, so let's start with the indices. What happens today is that after a very strong bearish candle yesterday, today we have a green one, and it potentially can start a bigger bounce or even a rally. So the odds for tomorrow are bullish, and they might even develop into something bigger. If we look, and this is for all indices, S&P 500, Nasdaq, Dow Jones, and Russell. However, I would like to say that while we are seeing this bounce, technicals, particularly the moving averages, they made quite a few bearish crosses and very significant ones, and this will push the price downward. So I would expect this bounce to be very limited, and there is a reason for this. So if we look at the 3-day closure today, technically this is a bearish, this is a bullish closure. We haven't seen a strong confirmation downward, and now the odds are bullish on this frame. So we have what daily frame and 3-day frame somewhat bullish. However, if we start looking at the bigger frame, for example, bigger frames, this is the 5-day frame which closed today, and we are seeing that it was a clear failure of extend the move higher, and we have a red candle over the green one. Most likely it will be, we might see another attempt to move higher. However, the chances for move lower are significant. And if we look at the even bigger frame, 15-day frame, today it closed clearly with bearish continuation pattern. So the chances for a move lower are fairly significant. However, we might see in the next 15 days, we might see an attempt to recover, an attempt to negate this candle, but the odds will remain bearish. And once we are getting closer to the monthly candle, which will close in 7 days, so far they are looking very bearish either. And if we look at the technicals for the monthly, this is another concerning thing that we're discussing since the middle of March. We're saying that once we have this cross, monthly MACD bearish cross, the chances for moving lower are significant. And this cross is higher by magnitude than the previous one. The previous one caused a decline of about 27%, so this one could be slightly bigger, about 30%. That's the very simple math here. Now let's have a look at the Elliott Waves. So there is a possibility right now, I did some preliminary work, So there is a possibility that after an impulse, or after a corrective wave A, which is ABC, right now S&P 500 is forming a zigzag for wave B, very sharp one. That explains why we are seeing lots of impulsive waves in both directions. So if S&P follows this classical pattern, then we would be looking for a fairly significant rally, I would say. So the lowest I would expect about 5%, and the highest maybe even 10% rally in the next couple of days or weeks. Let's see how it administers. So these are the targets. So these are the critical levels. So once, I'd like to say that this wave upward has been corrective. So the very first wave, wave A, is clearly corrective, and now what we would be looking is for a bigger zigzag. So although I'd like to say that this zigzag, it might not be wave B, it might be an even bigger corrective wave, as I outlined here in purple. So that's another perspective. And once we have this correction over, we would be looking for another very significant wave down. Let's see how it works. Now let's have a look at the sectors. So technically, sectors closed today with bullish candles. Financial is bullish. Technology is bullish. Healthcare is potentially bullish. It needs a confirmation. Staples, industrials, utilities, energy, and consumer discretionary all closed with bullish candles. So there is a very good chance for market to move higher tomorrow. However, I would like to say that if we start looking at the bigger frames, let's say 5-day frame or 15-day frame, like for the financials, for example, they closed by just how much? They just closed by 6 basis points below the low of the previous candle. Obviously, this is a bearish move, and we will be looking for very strong move in the next 15 days. The question is when they start and what kind of action they will be done. So the technology is also bearish, financial, and if you look at the 15-day frame, industrial breaking through major support lines. Staples is basically bullish. I would say that it has a very good chance to continue higher here, so it's not bearish at all. But if we look at the healthcare formed the top, bearish top, and there is a good chance it continues lower. I think this is one of the strongest configuration, one of the strongest combos here. Utilities, it's similar to staples. We have better chances to go higher. Energy is bearish, no questions about it. And consumer discretionary is also bearish. So out of 8 sectors, only utilities and staples are somewhat bullish. All other closed the 15-day frame with strong bearish continuation candles. So, and the staples and utilities would be able to hold the market. Now, if we look at the large caps, technically the same situation that we discussed with sectors right now. So Microsoft, Amazon, by the way, formed a very fresh 50 over 200 days moving average bearish cross, death cross. Apple, Alphabet, Nvidia, Meta, they are technically with bullish candles today. The question is how far they would go. And if we look at the 5-day candles, they are clean bearish. 5-day for Microsoft, for example, or 15-day for Microsoft. It's also a bearish continuation candle closing below the low of the previous one. The same, I believe, for Amazon. Yeah, Amazon, Apple. I think Apple is not, no, it's bearish. So technically all candles are bearish for 15-day. Nvidia had a very strong, and I think that the Meta has the strongest one. Yes, that's the biggest one, and it's already broken below the 20 periods EMA. Well, that's the perspective. Now let's have a look at Nasdaq. And let's try to do it together. So I left it unchanged. So this is the chart that we've been tracking since April 12th. And this is how we left it on April 19th when we shared it with our subscribers in the weekly report. So what we are seeing here is that very similar formation is happening that I outlined for S&P 500. So this is, and I think that Nasdaq is forming, going through the red path right now. This is potential wave C, fairly clean impulse down. And this would be wave C somewhere here, and we can try to measure it. Let's see how far would it go. So this is wave A, and this would be the target for wave C, and this would be the potential target area somewhere between, let me put some price here, price tags here. So this is somewhere between 21,400, let's round it, and 19 and about 20. So this would be an approximate area for wave C for its target. Well, that's there is a still possibility for move down. However, it's not very probable at the moment. And this could be wave A. Technically, it's the same. So the only thing that this would be wave A, B, and C of an even bigger corrective action. And I'd like to change this to 4-hour frame. And now there is a possibility that Nasdaq would be forming a bigger bearish flag, something like this, for example. Well, that's the perspective for Nasdaq. Let's see how it develops this wave. So far, it had a chance to make it an impulsive one, and maybe it will stretch for the next 5-7 days. However, it can be also sharper and complete much earlier. So that's the perspective for Nasdaq. And the feature of the day, the next one, I'd like to talk about Meta. So let's start with candles. So Meta formed a very strong bearish cross here, 50 over 100 days moving average. However, the candle is bullish, and there is a possibility of a move higher tomorrow. And if we look at the 2-day frame, this is also potentially bullish formation. If it closes like this or moves higher, it will be bullish. However, once we start looking at bigger frames, like for example 5-day frames, there is no luck here. So this is clearly bearish continuation candle, and even if we see another move upward, another bounce, it will be a very short-lived, I would say. And from the weekly perspective, it's also last week Meta formed a strong bearish candle, which will be difficult to overcome. And today it's also closed with a 15-day frame, 15-day candle, which is a strong continuation. Another concern comes on the technical side. So this is the MACD bearish cross, which Meta is potentially forming in April. So if this cross, it's marginally formed right now, so it's just a few basis points below. And if it completes like this on April 30th, this will be a done deal, and we would be expecting Meta to move low. And this, as you can see, this cross is of a record magnitude. It's 122% higher than the previous one, which caused the decline of about 76% for Meta in the year of 2022. So if something happens like this, and we would be expecting just a copy of that move, Meta would go towards 190. Right now it is sitting about 500. Well, just make a note. This is a very good possibility for this one, especially if it is confirmed on the monthly frame. And if we look at the Elliott Wave chart, this is the chart that we shared with our subscribers when Meta was at the beginning of March. It was about 600. We charted this one. So that's our perspective, long-term perspective. The critical level I'd like to emphasize is 384.33. A break below this level would definitely bring price lower, because it will be invalidation of a very big impulse of the bottom. And today is, let me change the date. All right, so April 22nd. Now, if we look at another chart, this is something that we can do together. This was the chart that we shared on February 19th, saying that Meta has a very good chance to move towards 570. Well, it obviously overdid our estimate when it was 701. And now we can make some adjustments to the chart. So I would say that this was wave 3, this is potentially wave 4, and this was wave 5 of a bigger impulse. So technically we would be looking for this one, and for this would be either wave 2 or B. I would say most likely B, and we can just measure potential moves here. So that I would say that Meta would need probably about 50% up. So this would be the most typical targets, 52618. So if we measure for the level for wave 2 or B, and if we measure this particular corrective wave, then it would be somewhat similar to that. So this is one, and it might go as high as 788 and overlap 1272. So another target area for this move would be somewhat here. I would say it might need to go here or later. Yeah, so this would be either this one or that one, and the most probable target is in overlap. So this would be wave A. It is clearly corrective. This is wave B. It's not impulsive, and this wave C. All right, so that's the perspective for our zigzag, or if most likely it's going to be a flat. And I'd like to put some targets here, and also we can make a bigger trend here. So this would be potentially the trending channel. Well, that's what we have for Meta, and I'd like to change this to April 22nd. So that's the perspective. So Meta might be forming a bearish flag here also as a flat in the Elliott Wave terms. Once it is complete, we would be looking for a much lower prices, which would be aligned with this one and also with the candles perspective, something that we would be looking here. Well, that's a quick overview of Meta, and if you like it, don't forget to say so, and also share this chart with your friends and other partners. Now, let's wrap it up. What did we see today? Volatility cooled, but it's likely just a breather, not a verdict. The dollar is in position. The next candle could seal the deal or extend the descent. Yields are steering, and TLT's bearish combo leaves little room for doubt. Gold and silver delivered strong technical signals. Are they done hesitating? Oil failed to reverse again, strengthening the bearish midterm path. Uranium's wave count point to a diagonal resolution, critical zone ahead. S&P 500 and Nasdaq continue dancing with uncertainty, but the candles are speaking. And Meta, today's failure showed its cards. If you missed it, rewind and study that segment closely. For daily setup, multi-time forecasts, and deep Elliott Wave analysis, join our private Discord. Master Trader Kyle and myself post precise entries and exits you won't want to miss. Subscribe now if you haven't already, and to the 18,000 plus who subscribed, thank you. Your trust fuels this channel. Like it, share it, repost, because timing is everything and the turn waits for no one. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.